All right, ABC involves the determining of the cost of activities and then tracing those costs to a cost object, which is an objective way to allocate costs. And then we use that to then allocate to the basis of the units produced or some other activity. The underlying assumptions are that activities drive costs and that costs should be assigned to products and services in proportion to the amount of the driver that they consume. The key idea here is a cost object. And this is a product or a service that is provided to a customer or an internal department, which can be an internal customer. It is a revenue producing event for which the management wants to know the cost. A high-level view of ABC is that activities performed fill customers' needs. And on the left, we see customers that are served by activities by a company which consumes company resources that have costs. So what we're trying to do in ABC is reverse it. Say, what are the costs of resources we have? How can we assign those to the activities? Then how can we assign the costs of the activities to the actual cost objects? And this is the basis of ABC. Simple concept, very complicated in realization. What we're going to do is we're going to do a two-stage model where we start with identifying the activities that are done by a department or a group. Then we assign those costs to activities. And an example would be, we're going to see a purchasing department which does two activities. So we have a department level cost, and then we have two activities conducted by that department, and then we assign cost or allocate the costs of the department to activities. Then we determine what is the proper cost driver which best represents how the costs are applied to the cost objects. And once we determine that, we gather what is the total estimated amount of those units of cost drivers, and then that gives us a rate. We'll call it the ABC rate, but it's basically a rate that we will use to charge to the underlying products for the amount of resources consumed. This chart is a bit daunting, but it is very accurate, so if you understand it, you'll be halfway home on ABC. The top rectangle here in white are the easy things. They're the direct costs that are attributable to a product. These are things like direct materials and direct labor. We know what those are because we see them going into the product, or we see labor being applied to manufacture a given product. So those are relatively easy. We saw those also in job order costing, and we called those direct labor and direct materials. This next level are these rectangles in orange, and they are the indirect resource costs. We lumped all overhead into one big bucket when we did POHR, but here we're wanting to be far more refined. So this level is we can think of it as department levels, where we have normal aggregations of people and costs. Then we examine the activities done by those departments, and then those are then split. The costs are allocated to those activities. The next step after stage one is to determine what is the cost driver that is best used to allocate the cost of those activities to the underlying products that use those activities. And finally, we derive a rate. The rate is simply the cost of the activity divided by the total number of drivers that are anticipated. That gives us a dollar amount per unit of cost driver. We can use that rate then for the final stage, stage two, where we will then allocate using those ABC rates to the products based on the amount of those respective activities consumed by those products. We'll do an example of this and you see how it works. An example we're going to use is a company that has three different departments. One is in inbound logistics, we'll call it the purchasing department. Two are in the operations, one does machining and one does finishing. For the purchasing department, they have two main activities. They place the purchase orders, they negotiate with vendors, they do the contracting, they make sure the quality is right, and then when the goods are received, they verify the purchase orders terms are met and that the quality is what was contracted for, quantity and quality. In the operations side, the machining department does the setup and conversion, and this is a company that makes steel shelving, so they will do the conversion from raw steel, raw material steel into shelves, and then they transfer to the finishing department, which will do the polishing, finishing up the production, and putting it in boxes ready to be sent to customers. We're going to use an example starting with the purchasing department. The manufacturer, in this case, buys raw material that are used in production. And the purchasing department does a few things. First, they identify vendors, they contact them, receive bids, negotiate, sign contracts, and then let out the purchase order. on behalf of the company, which binds the company. Then when the goods arrive, they verify that the purchase order terms are met, and they assist in the receiving for the test of the quality and quantity of goods received. So these are the main functions. We're going to follow the same steps that we had talked about before, and there are 6 steps. Identifying the activities, then assigning costs to those activities, then determining the basis on which those activities should be allocated, then determining the cost of the cost objects using that rate, and then we can assign the cost accordingly. First, we're going to look at purchasing department and looking at their department level costs. And we're going to hop into Excel once I kind of go through this, because it's easier to read on the screen as it is right now. So first, what is the department and what are their costs? The purchasing department involves getting the raw materials to the factory and letting out the contracts. There's one supervisor who supervises both functions, and there are 3 managers, and they're paid $7,800 per month. The supervisor is paid $5,000 a month, and he works, or she works, 60% in purchasing and 40% in the receiving. The receiving staff are 2, and they are paid $2,400 per month per person. And there are other costs, $4,500, which are allocated 25% to purchasing and 75% to receiving. So we'll stop there and put it into Excel. In Excel, we just move the data on the left here, and on the right, we'll fill in the data. First, in total, the supervisor is paid $5,000. We're told from the data that he or she is allocated 60% to purchasing and 40% to receiving. So 0.6 times that amount is purchasing, and 0.4 times that amount is for receiving. Secondly, we have purchasing managers. There are 3 of them, plus 3 times, and they're each paid $7,800. And so that's $23,400. And they are all involved in purchasing only. And we have staff that does receiving, and they're paid, there's 2 of them, and they're paid $2,400 each. 2 times $2,400, and they are all in receiving. And then there are other costs, which are $4,500, and those are 25% in purchasing and 75% in receiving. Then we do a little bit further breakdown and say, okay, those are the functions. What are their activities? Purchasing is both a function and an activity, but the receiving function has 2 distinctly different activities. One is the verification of the purchase order when the goods are received, and second is the inspection of the items so that they are of the quantity and quality as contracted. Here we're given some further data. We're told that the verification of purchase orders takes 15% of the receiving staff and 30% of supervisor. Supervisor receiving, verification rather, the supervisor's 30% times the receiving portion, and the receiving staff is 15% of the receiving staff, which means the other amount, we can just do it by subtraction, is for the inspection. Furthermore, we know that the other costs are all inspection and not verification. What we have is the total department cost right here. This is 32,000. Let's highlight it so you can see it. So that's the total cost for the department. Then we split it into these functions, but there are others that are overlapped into green. So the resultant activities are, I'll just put arrows there. So that's one, and those. So these are the 3 activities conducted by the staff. What are the drivers looking at these 3 activities? The number of purchase orders is the driver for the purchasing function. That makes sense. And the verification is also by purchase orders, but the inspection is allocated based on dollar value of the order. Next we say, okay, now we have a driver. How much do we expect to have during the entire period? And the number is, right here is 300 and 120,000. So this is 300, this is 300, and this is 120. So now we have what we need, which is a dollar amount and the basis of allocation, the driver. The total cost of $27,525 divided by the 300 drivers means that for every purchase order, we will charge $91.75. Likewise, for the receiving function, total cost for the receiving is 1320 divided by 300 orders means $4.40 for inspecting the purchase order once it arrives. And finally, for the inspection of the goods and receiving, we have 8,855 divided by the total value of 120,000, which is 7 cents. 7 cents or 7% of the value is charged to the product that is being acquired. So that's how we use ABC, starting with the department, which was right here in yellow, then breaking into functions, which we had two, purchasing and receiving. Then we split out into activities, which were necessitated, taking this one function and further refining it into two activities of verification of PO and inspection. Once we know the activities and the allocated costs, we then go to what is the driver. In this case, it was POs, and the dollar value. And then we look at the total expected amount for those drivers, which are 300 purchase orders and 120,000 in purchases. Now we're ready to get the ABC rate, which is the dollars divided by the driver for each of the three. So that's an overview of how to do ABC. Next, we're going to look at how would you allocate this generally across all the products. So what we would do is take the cost of the purchase itself, steel or plastic or whatever. We would then add the cost of purchasing, and that was the $90, $1.75, and then add the cost of PO verifications, which is about $4, and then add the cost of inspections, which is 7% of the value of the shipment, and then that equals the total cost of the purchased goods. So again, what we're doing is we know that we bought steel, but the overhead was, without ABC, just charged in one big bucket, but here we can actually allocate costs and load up the cost of getting that steel into the company. So in a bigger picture, we had the purchasing department, and there's the total cost that we had in yellow, $37,700. And then we had the three activities, which were POs, verifying, and inspecting, and we allocate the amounts to the purchase orders based on the amount of drivers consumed by those three products. So if we wanted to go to the other departments, we had machining and finishing, and to save us the work, we just illustrate that if we went through the exercise of going from department to function to activity, we would have found that machining has two activities: setting up the conversion of the steel into shelves and the actual conversion, forming the shelves. And when we do the cost divided by the driver, we ended up with a setup of $160 per run, and then we have $32 per machine hour for allocating for the cost of manufacturing the shelves. In the finishing, we have two activities, the polishing and the packing. Polishing will be charged at $33 per labor hour for the polishing of the steel shelves, and then the packing is by weight, and it's $5 per pound. We can then assign the costs based on now all of the activities, the three activities in purchasing, plus the two activities each for machining and finishing. And so on the bottom here, we have the further example of a job 554 with 21 machine hours and 32 labor hours for finishing, and the weight of 230 pounds. What would be the activity-based cost assigned to that job? And so in this case, the machining would charge a setup one time per run of 160. Conversion is 21 machine hours times the $32 rate is 672. Finishing has polishing of 32 labor hours times $33 per hour. That's 1,056. The packing is by weight, so it's $5 per pound times 230 pounds is 1,150. So the total activity cost for these two departments is $3,038.